As ESMA, we are here really for two purposes. On the one hand, it's meeting with our international counterparts. There are a number of international meetings of the of the international securities commissions, for example, but also to talk bilaterally to some of the US counterparts and make sure that we understand where we all are. I think particularly important at this time of significant market volatility and uncertainty. And on the other hand, it's also to make sure that we actually look at how can we bring together the international regulatory framework forward. Where do we need to focus going forward? Where do we need to maybe adjust? And as ESMA, we want to be engaged in that debate, and we have got very good relationships with our US and international counterparts on the securities market side.
You talked about the uncertainty and the volatility in the markets. Can I ask you, what is the level of nervousness here at the meetings that you've had? What are some of the main concerns?
So a lot of the discussion is obviously around looking at how the markets are currently functioning. I have to say, from a European securities markets perspective, we clearly have seen enormous volatility, enormous volumes being traded. But overall, the market infrastructure has held up very well. Markets have functioned orderly, and the plumbing seems to have been working even in these very high volume days with significant peaks and troughs. So overall, we are keeping a very close eye on that. As the European Securities Markets Authority, we're working with the national supervisors to make sure that we have a good picture of what is going on in the markets and are monitoring that very closely, obviously, given the continued uncertainty that is there. There's a lot of likelihood that we will see further market moves, I suspect, over the next weeks and months ahead. And so we just need to remain very vigilant.
Absolutely. I want to talk about ESMA's role going forward. There are plans by the Commission to give you a broader remit over infrastructure, trading, settlement, like a European SEC. But there are definitely some roadblocks. Talk to me about some of those obstacles, and talk to me about the opportunity of you being given more powers.
So basically, Europe has for a long time, but more focused recently, very much wanted to strengthen the European capital markets. We need well-functioning, integrated capital markets for Europe to serve companies, serve ultimately European growth, and also to serve the investors in Europe. So from that perspective, there has been a new impetus recently on looking again at what can we do to further build these efficient capital markets for Europe. And one of the aspects within that is also looking at the regulatory and supervisory regime. What we are still facing in Europe is a very fragmented market. We have a lot of barriers still, even though we have a single European market. And therefore, it's important that we look again, where can we be even more efficient? Where can we build the competitiveness and the attractiveness of the European markets? And as part of that, there are considerations whether in certain areas, actually our current supervisory framework could become more efficient by us working more closely together, ensuring that we are not creating additional barriers to cross-border capital flow. And therefore, that is where there are some debates as to whether ESMA could take on additional responsibilities.
Mm-hmm. But I'm sure you'd be facing plenty of opposition from the national watchdogs.
Actually, it might be surprising to hear, but ESMA last year published a position paper on the European Capital Markets Union and how to strengthen the capital markets. And that was agreed by the ESMA board, which is the heads of the 27 national supervisors. And within that, we called for a real evaluation and consideration of where maybe in some areas it makes sense to lift the supervision to the European level from the national level. Because, for example, these are players that work on a systemic basis across the European markets. It makes sense to have a more broader risk overview. It might be more efficient to do some of the supervision at an EU level. And don't forget, ESMA actually already has direct supervisory responsibilities in a number of areas, for example, for credit rating agencies in the EU. So it is really about looking in which areas would it make sense to potentially expand that European level mandate. But of course, it will not be everywhere, and so we will continue to also work very closely with the national supervisors, who will remain responsible even in the future for the vast majority of the day-to-day supervision. So it will really be a mixed role for ESMA, but with hopefully some enhanced direct supervision responsibility in certain targeted areas.